Team, welcome back to another midday broadcast with the Forecast Edge. Matthew here. Today we are going to be going over the positions that we are in on. This is February 17th, 2026. Okay, and we got a lot of exciting stuff. So, again, at the moment right here, what an incredible achievement. We are right now the 83rd rising community in our field here. So, we have the hot print. This is going to be our edge alert from last night, okay? It says assets, US quarter 4 GDP growth, advanced estimates, February 20th release, okay? Let me take a sip of it. I hope everybody's having a good day. So, real quick, it says thesis, the shutdown dislocation. The Atlanta Fed GDP now tracker is parked at 3.7%, while the professional blue chip consensus is anchored to 2.2%. This is a 1.5% gap and a massive mispricing driven by human analysis. Okay. It says over discounting the 43-day government shutdown, while a 0.70% shutdown drag adjustment brings the fair value down to 3%. The market is still mispricing a 3% price print as a coin flip, right? We are sniping the data driven reality before the experts can catch up, right? So, development matrix, optimal expression, buy yes at what's it called? 3% here. This is the highest conviction tactical play to capture the model consensus gap. Entry price will be yes at 58 cents. This is when it went off yesterday. We want you to get in at 58 cents. Target payout is a full dollar. Implied probability is 58, right? With our additional edge, we are predicting a 75 plus percent based on our nowcast stability, right? Here is the exact link. That's what's so nice about our software in our the Substack community is that the trades go right to you, and in our actual post, the trade link's right there. All you ever have to do is click here, okay? So it's going to take here, and we're going to go straight to our contract, right? Which, as you can see at the moment, we're in a couple of these. We got the 3.5. We have 50 at 3.5. Okay, and the above three is at 59 cents. So this is still a perfect time to get into these positions if you so choose to, right? So what I'm going to do here is show you again how we can do an executed trade on this. When you're using Kalshi, you can do two types of trades. You can buy it in dollars or you can buy it in contracts. So I like to execute the trades when I'm putting these positions on, whether it's a no or a yes. I like to execute the positions in dollar amounts. So we already put um 20 about 20 $17 on the three, but this play right here, we're going to put an additional $5 on it, okay? And it's telling you the exact payout. I'm just showing you how to execute these positions. So right now we put $5 in if we're right, when we will be receiving an $8 payout, okay? So I execute this position now, okay? So what that does for us is now it's telling me that I have 8 yes at 59%. So what that's saying is that I have 8 contracts. So we're going to switch it from dollars and now go into contracts. And this is saying that I have 8 contracts of yes that it will be above 3%. The US GDP growth in quarter 4 will be in 2025 will be above the 3% consensus here. So I have 8 contracts of it at yes at 59 cents. Okay. Say I wanted to get out of half of them at the market. All I do is I'm selling 4 contracts and it's telling me that I will be receiving $1.57. That's half of my position. All you have to do then is review the position and submit it. Okay? When that's done, you can get out of this and now you'll see, well, there I was buying 2 more. Let me show you this. When you're going to use um the sell contracts, it's going to be right here. You see the yes 59 cents and then sell 58. So I'm going on to the 58 and it's telling us that now we have 12 contracts because I bought a few more of the 59, right? I bought two more dollars, so now I'm at 12 instead of 8. I'm going to still get out of, let's say, half of them, or what I was planning on doing originally. So I'll get out of 8, a majority of these contracts, right? And I will show you. I review the position and press submit, and now I'm out of 8 of the contracts for yes above 3%. It's, I'm just showing you how to execute these positions today, okay? And you can see that there's still 4 yes at 59 cents, okay? The same difference. If I wanted to cover my position, you go to contracts, I put 4, and I review my position, submit it, and now I am out of the position completely. It's really that easy, and I'm letting you guys know that these predictive markets, um, and especially with the trades that we um that our algorithm picks up, these trades are um super easy money positions. You know, all we tell you the exact money management here, and we tell you exactly how to get in and out of these positions. So for example, right here, the development matrix was the optimal expression. Buy yes at over 3%. This is the highest conviction tactical play to capture the model consensus gap. Entry price was 58 cents, which is what it's trading at today. So this is still a good trade to get in. Still, you're right at break even. Target payout is a full dollar. And remember, implied probability is 58% in the forecast edge. We're adding an additional 17% because of the nowcast ability. Okay, there was the trade link where we can execute our position, and money management is the nowcast gauge. Do not hold blindly to expiry, right? Use the Wednesday, February 18th final GDP now update to scale your risk. If the GDP, which is this is going to be news coming out tomorrow for us, if the GDP now estimate is um here's the rules of engagement. If it's going to be under the 3.4%, hold for high conviction. The 3% floor is safe even when this is this surprise shutdown drag, right? 3.2 to 3.3%, hold neutral. Margin for error narrows to within the model's historical absolute data, right? And then this is going to be under the 3.1%, and then this is skip and cut risk. The convergence momentum is too bearish. Sell before Friday's release, okay? And we will be, as the week progresses, so will our risk management and our rules of engagement on this position here for this edge alert, okay? We also have this edge alert here, okay? We have our edge alert here. Um, which was the declassified core CPI print, which was 190% in 3 days. This is the one that we went over on our last edge alert, the Friday the 13th macro trap. Both of these positions ended up working out and paying off. So that was our last Kalshi play. Now, another one that we have here is going to be, let's see, another one that we have here is going to be the energy spike play right here. Okay. XLE in the BNO. So these were the option plays. Again, when you're a part of our community, we send you'll get these edge alerts the moment that our system is detecting that we need to put these trades on. We tell you the reasoning of why the trade should be put on and our thoughts behind the trade. And it's the best part is right here. We give you the exact contracts for this position. We're looking for you guys. To take XLE June 18th, $50 calls, right? And then the strike price is the deep liquidity, or the strike context, excuse me, is the deep liquidity and value rotation from the inflation hedge, right? Because this is one of our oil plays. And it gives you the execution of the limit order. It tells you the stop losses. And again, we are always here and we go live to manage these positions here on the Forecast Edge YouTube channel. And we have tons of plays and we have tons more coming out and it's exciting stuff. We're just getting started here. So we want you guys to be a part of it. Most of these plays, if not all of them, by the end of this week have had produced returns of over 145%. That is the minimum we've had in returns for the edge alerts that have gone out to our community. And again, it really is such a great thing and such an easy way for us as traders to be able to go in and out of whether it's predictive markets, options, or futures trading. Like, we have all those things covered. And if this is giving you the contracts, right? We're giving you the reason why we're taking the trade, and then we're also providing you with the proper risk management for both taking profits and covering your position, and using stop losses in getting out of positions that would be going against us. And like we said, right now our play is here at the above 3%, at 59 cents. So this is still a great time to get in. And this is from the edge alert that we just had go off last night. Again, this is just going off. And what we call this one is going to be the GDP hot print. I'm telling you guys, the trading in this environment hasn't been this exciting in the history of trading. It's awesome. Predictive markets. These are brand new financial instruments and brand new ways for people and traders to make profits and or use these instruments as investing tools. So again, we can even go over one more. So this is going to be a walkthrough of how to execute positions using Kalshi. Okay, so our play was right here. This is going to be the GDP hot print, okay? Now, again, with the Forecast Edge, if you go to our website, theforecastedge.com, that is where you can join our war room, and you will be able to be once you sign up for our one of our plans, you'll be granted access to our edge alerts, which are sent out through our community on Substack. So we'll go here, and I'll show you this real quick. Okay. And this is how we're going to do it. We're going to do kind of a live walkthrough real quick. But first thing I'm showing you here. Ready? This is theforecastedge.com. You need to go to join the war room, put in your information, select what plan's right for you, and then you will be granted access to our Substack community and our edge alerts. And I'm telling you, the year is just starting, but we are seeing some fantastic returns on these plays. Okay, you've heard me say it, and I will say it again because it's true. Okay, now you'll go join War Room, put in your information, and then you'll be granted access. So what you get with this access, and again, this is a huge achievement for us right now. We are the 80 in our field on Substack. We are the 83rd fastest rising community on their platform, which is a great thing. So, and thanks, Pop. Now, this is the play from yesterday, the U.S. GDP hot print. Okay. And once you sign up for our plans, then you'll be granted access to these edge alerts, okay? So first things comes first. It's the asset. It's the U.S. quarter 4 GDP growth advance estimate for February 20th release. Okay. Now, the thesis is the shutdown dislocation. The Atlanta Fed GDP now tracker is parked at 3.7%, while the professional blue chip consensus is anchored to 2.2%. This is a 1.5% gap and a massive mispricing driven by human analysts over discounting the 43-day government shutdown. While a 0.70% shutdown drag adjustment brings the fair value down to 3%, the market is still pricing a 3% plus print as a coin flip, okay? We are sniping the data driven reality before the experts catch up, right? Here's the play. The development matrix, optimal expression by yes at 3.0%. This is the highest conviction tactical play to capture the model consensus gap. Okay. Now our entry price is at 58 cents and our target payout is going to be the full dollar. We're waiting for these positions to go into our full maturity and go from 58 cents to the dollar at expiration of the contract. Now that's a 58% chance at the moment. And with our forecast edge in our our algorithm and our system is giving us an additional 17%, bringing our probability to 75% based on the nowcast stability. Okay. What's great is the trade link is right here for you guys, but real quick, we'll go over the money management. Okay, this is the nowcast gauge. Do not blindly hold this into expiry. Use tomorrow, again, Wednesday, February 18th, the final GDP now update to scale our risk. That's what we're going to be using to scale the risk. It says if February 18th GDP now estimate is blank, you can go to the link on this. We'll show you. It says if it is going to be under the 3.4 hold high conviction, the floor is the 3.0 floor is the safe, even if the surprise shutdown is a drag, right? Then it goes to 3.2 to 3.3%. We're holding for the neutral. Margin for error narrows to within the model's historical absolute error, excuse me. And then it's going to be below 3.1% is the skip and cut risk exit, which is going to be the convergence of momentum, and it's going to be too bearish. So we're selling before Friday's release. And we will be going over these positions as these events are taking place. So tomorrow, when the GDP now updates for the final time before the actual number comes out, we will assess our um what's it called? Our rules of engagement and risk management on this position. So now that we've gone through the edge alert, we're going to go to the trade link that was provided, okay? And it's going to take us straight to the contract that we're trying to get into. Remember, and that's going to be the above 3% here. So it's at 59 cents. We're going to click on this contract and it will bring us over here. Now, there are three ways you can execute trades on Kalshi. It's buying them in dollars, buying them in contracts, and buying them on limit orders, which is going to be the same thing, but you're laying the book. So you'll only get filled if these contracts are trading at the certain price, which would be anything from 50 958 and under, because you're going to be playing over and or under the bid and offer. So how we like to get into these positions is using dollar amounts. Okay, so I like to execute the entrance into these positions in dollars, and then I like to execute my exit and my taking profit positions in contracts, and I'll show you how that's done in just a moment. So we're going to do $5.15, right? Excuse me. $5. We'll do $5 even then, for a payout of $8 if the answer is yes. Okay. So again, we're gonna review this. We have our $5. We're buying yes at 59%, right? Okay, and that's giving us a payout of $8 if we're right. But now you can see that it says your position. I have 8 contracts of yes at 59 cents. Now, what this is asking, or what this is telling us, is that we have the 59% chance that it is going to be the US GDP growth in quarter 4 of 2025 is going to be above that 3%. And we have 8 contracts of it saying yes. Now, we're going to go from buying dollars, right, and buying contracts to down here where our contracts are. It says yes here as the buy and sell 58, right? So we're going to click on this sell 58 and it's going to automatically adjust and pop up this table for us to execute our trades in. So now I have 8 contracts of yes, and say as the event is getting closer and we get our update tomorrow on our GDP right here on our GDP now estimate tomorrow, we may or may not see a volatility change in this contract because of what it's stating. So, and what it's telling us about the numbers that will be coming out. But let's say that it starts working in our favor as we think, and the probabilities are telling us it will. We can scale out of these plays by covering some of our positions. So, for example, this time I will do 6, and I'm telling this um, order board that I want to get out of 6 of my yes at 59 cents contracts, right? So I will review it and it's going to pay me $3.37. I'll review it and submit it, right? Okay, so I covered that, but now you see it still says that I have 2 of the yes at 59 cents. And with that being said, it means that I have 2 contracts on this position still. And how we do this is now if we're still to be working in our favor, we're holding on till the expiration of what we think is going to be the full dollar, which would be the full maturity of the contract this by let's see right here. This is going to be February 20th at 8:29 a.m. Eastern Standard Time. Okay, so at that time, these contracts will be expired, and they will expire at a full dollar and or a penny based off of what the actual numbers will be. Okay, so for example, I'm going to get out of the two of them, right, and show you that now once I do this, I'm completely covered. And if I go back down to our actual um, percentage board, it says 59% and 42 percent, or in 59 cents and 42 cents, but you're reading them in probabilities of happening out of an 100% chance, right? That's what predictive markets are. We're predicting what's going to happen. And remember, with us at the Forecast Edge, we don't just predict, we profit, and we want you guys to profit too. Again, with that being said, what you have to do is go to our website, theforecastedge.com. You'll join the war room, select which plan's right for you, and then you'll be granted access to our Substack, right? And this, like I said, this is right now in the top 100 fastest growing communities in our field. So please, please, please make sure you're clicking the link in the description, going to our website, joining our war room, selecting the plan, so you guys can be getting your edge alerts too. And with that being said, thank you for tuning in. We will manage these positions tomorrow during our live broadcast. And again, happy trading, and don't just predict, profit.